Welcome,
Good,
everyone. It is our Q3 2026 update.
good afternoon.
Yeah, good to see everyone. I have a little surprise. Oh, you can hear her. I have a little surprise here. If I stand on my tippy toes, you guys can see her.
Mhm.
This is baby Elizabeth. She is 11 weeks old.
Our first
Her
webinar.
first webinar. We'll see if she makes it the whole way through, or if I need to pass her off to one of our lovely team members to give her some snuggles. But that's our biggest update of the quarter. But
Oh, yeah.
let's jump into the slides. Welcome, everyone. Excited to have you here. This is our Q3 2026 webinar. As always, feel free to ask questions in the chat and in the Q&A inside of Zoom, and we will answer those as we go through our presentation. We try to answer them kind of right in the moment where they fit in with the slides, and then anything that's left over at the end, we answer those as well at the end. Feel free to introduce yourself in the chat, tell us where you're joining us from, and let's jump in. It has been a busy quarter. I think
We got a lot to cover.
this may have been our busiest quarter in 5 years, and I don't think Elizabeth wants to do a webinar
She
today.
was perfectly silent as we're getting ready. And that just figures that's how it goes.
Yep, absolutely. Our usual disclaimer. You want to do that for me, Nick?
I'll do the usual this
I'll
time.
get the baby.
So this is our quarterly update webinar. We want to make sure you understand this is not in. Oh, perfect start here. This is definitely unscripted. So our usual disclaimer that this is not any sort of advice, and past performance does not necessarily indicate future outcomes. So just giving you some time on the screen here to read this. If you're reading this now or in the replay, it's the same verbiage as always. If this is your first time with us, just a little bit about us. My name's Nick Stageberg, and usually right next to me is my incredible wife, Dr. Elaine Stageberg, and we own Black Swan Real Estate. We operate Black Swan Living Property Management. We have over $500 million in assets under management. We've raised over $115 million of capital to build that portfolio. We've got a real estate sales team coming in on $250 million of real estate sales across the lifetime of that team. And we do some ground up construction as well, about $50 million in ground up construction of new multifamily projects. We've got another new multifamily project coming up as well. So just a little bit of a disclaimer and background on us, and we've got some headlines to share.
Someone yesterday, I did a different webinar, and someone said something like, how are you such a growth-oriented company? Or it was some sort of question like that. What you just saw in the last 90 seconds,
That's it.
that is the crux of it.
That's right.
We do not take ourselves too seriously. We try our best to multitask and handle all the competing demands. And we have an amazing team who's right there at the ready to pick up balls and move them across the finish line.
Who's got the baby?
Laura has the baby.
Well, Laura, I know you often tune in for the webinars. Thank you for taking the baby.
Yeah, that is the crux of it right there. All right, here we are, headlines of the quarter. So if you were there right at the top of the call, you got that sneak little peek of baby Elizabeth. Our youngest team member was added to the team. Surprise announcement that Secure Freedom Fund is opening for investments. So we'll share those specific details here in just a few minutes. We'll talk a little bit about continued challenges in the multifamily industry as a whole. We added 38 new team members to Black Swan Living year to date. Under contract on many assets. We've closed on several assets. We have a new construction project in the works. It has truly been a crazy quarter. I don't think we've had a quarter like this in probably 5 or 6 years.
10 deals in flight. We try to avoid a wall of text on our slides, but there's just that many deals in flight right now.
Yeah, so we're super excited to share all of those updates with you. And then we'll have a couple of slides where we're talking about how we're implementing AI across the portfolio and just the massive benefits that has brought the portfolio. And then we'll talk about rent growth and some other things. So we have a lot to cover here. Here is Elizabeth's big official unveiling.
You missed it.
Yeah. You guys, I wear her in that baby wrap probably 80% of her waking hours, and she sleeps just fine all the time. It blows me away that she didn't want the microphones and the headphones and all this stuff. But this is our sweet baby girl, baby number 6, Elizabeth Selah Elaine. She was born on May 12th. And if you joined us for our Q2 webinar, that was our last one that we did, I think I was 38 and a half weeks pregnant. I had to leave that webinar to use the bathroom because it was so hard to stand for a couple of hours pregnant. But here she is. She's part of the action. She has been to an appraisal, multiple apartment walkthroughs. She's been to a conference. I was hoping I could get her to a webinar today. She wasn't having it. She has just folded into the family and is just the light of our life for sure.
Love it.
Absolutely.
We doing a drum roll?
Go for it.
People like the drum roll.
Here we go. Here's our announcement. Secure Freedom Fund is opening.
Open to the waitlist on August 7th. Open to the public on August 14th. If you're not already on the waitlist, make sure you get your name on the waitlist right now. It's securefreedomfund.com. We're raising about $10 million. We've got, I think, 14 or 15 million on the waitlist already, so we expect this will fill relatively quickly. Slower than the last round. The last round filled in just a couple minutes, which is not necessarily our goal. There are a lot of people who are unfortunately not able to get in. We assume that we won't raise 10 million in minutes here. But just be prepared for 1 o'clock Central on August 7th. If you're on the wait list, if you'd like to invest in Secure Freedom Fund, if you have any questions, anything, funding timeline, whatever, feel free to reach out to Rachel, to our amazing team, and we'll make sure that we're able to serve you, whatever your situation is. So securefreedomfund.com if you want to get more information there, or put your name on the wait list if you are not already on the wait list. People have been waiting for this for quite some time.
We are super excited about that. It has been, we had that small opening earlier in the year, but it's really been all of 2026 that we've not had a bigger opening. And we're so excited to be able to welcome new investors into the fund. And you'll hear all about the acquisitions that are leading to that. Let's talk a little bit about industry and economy updates, just getting some sense of sort of what we're thinking about as leaders, what we're hearing from our peers in the industry, from masterminds that we go to, other people who have portfolios, similar or larger to our size, always trying to have a beat of, not just what's happening in our own portfolio, but what's happening more on a macroeconomic scale as well.
Absolutely. So these are just a couple of headlines that we pulled from different emails that we receive, and there are countless other headlines like these. So you may have heard of the fall of S2 Capital here in this last quarter. So they lost $400 million on a single fund with no return of capital. They actually raised rescue capital for that capital and then lost the rescue capital as well. And these were one of the groups that famously said fixed rate is for suckers. We've talked about how in the past when we were getting fixed rate debt, a lot of people kind of looked down their nose at us, called us unsophisticated because on a long enough timeline, variable rate debt usually gets you a better IRR than fixed rate debt, but fixed rate debt gives you an element of safety that we really value. We also have seen some capital loss from other groups that you may know about, like Ken McElroy or Brandon Turner. There's a tremendous amount of chatter on social media about some of these capital losses as well. Not as epic as the $500 million from S2, but $40 million in one deal, $16 million in one deal. One of the major pension funds lost almost $500 million in a single quarter, liquidating like 20 deals, which just crazy numbers, absolutely crazy numbers. It's a challenging time in the industry, and there's two pressure points there. One is high interest rates, and the other is high vacancy and lots of concessions due to the construction boom that happened during the pandemic. So here's just a quick chart that kind of summarizes that in one really succinct visual. If you're in podcast mode, maybe take a look at it. But you can see that concessions being offered on rental units today nationally, these are national statistics, are pushing 20%. This is the highest concession rate in at least 25 years. And you can see your average lease in the United States today is offering a 18% concession. That's 2 months free rent. And you're seeing that on north of 10% of leases. And, you're even seeing concessions on renewals. So if you live in Austin, Texas, rents are down over a third, over 30% in the last few years. And you might ask for 2 or even 3 months free rent on a renewal. Those are just extraordinary revenue pressures to deal with. There's lots of expense pressures, but there's just a big boom of construction that still to this day has not been absorbed and in select markets throughout Sunbelt, Phoenix, Dallas, Austin, Jacksonville, those sorts of markets.
The lifeblood of any organization is, of course, revenue. And for a real estate portfolio, revenue is rent. And so in every single quarter, we share rent growth, and we make sure we have that here in the live presentation and then also in the PDF brochure that goes out as well and is uploaded to blackswanteam.com/updates. And we are in a market that is experiencing rent growth. We don't have any concessions in the portfolio. Our vacancy is very, very low. A lot of that is because of our disciplined operations through Black Swan Living, right? All the way from that, thinking about that marketing and having a lead funnel as big as possible to bring in qualified candidates and then getting them through the leasing process as swiftly as possible so that we've leased to them before they have ever even heard back from other property management companies in town. having a compelling product that's nicely renovated, nicely maintained, having a stellar reputation in town, all of those things. And then the market as well. Minnesota is a very strong market. Rochester is extraordinarily strong with the Mayo Clinic expansion. And so we feel so fortunate that because of the choices that we've made operationally and then in our market, we're shielded from a lot of this, but we're very aware of what's happening in the country as a whole, and always trying to think about like what can we learn from the market, what can we learn from others, what mistakes have others made that we can learn from instead of having to make that mistake ourselves, learning from them first, and always trying to position our portfolio for the greatest amount of strength. So that's a little bit about what's going on in the market. There are headwinds out there, and we have been running into those headwinds for years now. And there are certainly times when it is exhausting, but it's worth it. It's worth it for how strong our portfolio is, how well we're able to sleep at night, for the successes that we've been able to enjoy over the last couple of years. And we certainly appreciate all of our investors who have placed your capital with us. And we know, what an extraordinary act of trust that is. And we're just so grateful that we're able to steward that capital safely.
So the one pressure is, pressure on the revenue side. The other is interest rate pressure. We kind of spoke to this in advance that Kevin Warsh was coming in as the Fed chair, which is a very surprising appointment by the current administration because, Mr. Warsh is well documented as being more concerned about inflation and being in favor of higher interest rates than being concerned about unemployment and being in favor of low interest rates. And so at this time, the market's pricing in, one or maybe even two price hikes by the end of the year. The Fed chair can't just control Fed policy. He can kind of guide it and steer it, but can't control it. The biggest thing that he can control is quantitative easing, where the Fed, buys treasuries. He calls it reverse Robin Hood, stealing from the poor to give the rich, which is probably, pretty accurate, but will also lead to higher treasury rates. May not have as big of an impact on Fed rates on prime rate, but will have a big impact on treasury rates, which has a huge impact on our line of business. And we've got a really compelling chart here on the next slide where we talk about that.
The thing that I'm most curious about with Kevin Warsh as the new Fed chair is historically the Fed has always done what is called forward guidance. So they have their votes at their meetings where they set policy, but then they're always kind of saying this is what we expect will happen at the next meeting or even the meeting after the next meeting. And Kevin Warsh does not like the concept of forward guidance, so he's going to pull that back. And I am very curious to see where that goes because so much of the economy, of course, I think this way because I'm a psychiatrist, so much of the economy is really just a study of human behavior, right? If someone's saying these are the rules under which we're all going to play the game right now, and these are the rules that we're going to play the game in the future, well, then, humans change their behavior to play within that game, making the best choices they can possibly make. And so I think it's going to be really curious to see where our economy goes with a lack of forward guidance that has been provided for a very long time.
Yeah. So again, a really compelling chart if you want to take a look at this. Earlier this year, rates, these are 5-year treasury rates. These have a huge impact on our borrowing rates in the multifamily industry. They really got quite low as low as 3.5%. And then when the things heated up in the Middle East, we got into just a dramatic escalation of rates. And basically every time there's an escalation in the Middle East, you see those treasury rates bump up because war is inflationary and projects that there will be no Fed cuts in the context of that escalation. There's been pressure on oil prices, tariffs, lots of different policies that have led to a higher interest rate environment and a forward-looking higher interest rate environment. So just as a concrete example of this, this climb in rate just this spring, just in the last quarter, reduced our cash out refi proceeds on one individual deal from $3 million to $2 million on one deal in just this last quarter. So it makes it much harder for us to get significant cash out refinance events. Fortunately, we're in a situation where we're not in a variable rate debt instrument that kind of holds us hostage and has to make us make short term hasty decisions. And we're shielded from this, but it makes it harder for us to get big cash out refinances. And at some point, many of those fixed rate loans will roll over here. And we're in a situation where like our interest rate could double when we refinance, and it did so in this most recent refinance event. So just the next 6 to 12 months, it seems like rates are going to continue to be higher for longer, and property values are going to be soft. It's a situation where we're making sure that our legacy portfolio continues to perform, continues to be prepared for upcoming refinance events when our fixed rate debt matures on assets like Nicholas or Tenara Villa or RDS. And then we have a pretty outrageous acquisition opportunity in the marketplace right now because as interest rates have gone up, prices have gone down, and there's just a lot of groups out there in the industry that have really struggled other multifamily operator groups, other private equity firms that have had capital calls, that have had capital loss. Fortunately, we have not ever had a capital call. We've never lost investor capital before, and it's positioned us to be in a place where we can buy a lot of assets at extraordinarily low prices. There's a property I'm looking at right now. The most recent transaction price was $280 a unit. Current pricing guidance is $240 a unit. This is just 3 years ago it transacted, and we're looking at offering like $190 or $180 a unit, like $100,000 a unit less than the owner paid for it just a few years ago. And those are the types of deals we're seeing in the marketplace right now, and why we have so many deals. We have about 10 deals that are in flight right now. It's these two pressures that are just really giving a lot of groups challenge, and it's a headwind for us that we're fighting ferociously to resist and deliver returns to our investors, and also creates an acquisition opportunity in Secure Freedom Fund.
All right, let's talk about portfolio-wide updates. So that gives you some sense of, that's like our mini state of the market that we've been including in our quarterly updates now for about a year or so. We need to get a whole state of the market on the books sooner rather than later, and dedicate a whole hour or so to it. But let's dive into the parts that we can control. That's what Nick and I think about all the time, right? Very much like a serenity prayer lifestyle of controlling the things that we can control, making the best decisions about what we can't control, right? So we can't control the Fed, we can't control macroeconomics, but we can control our little corner of the world inside of Black Swan Living. And we have a lot of fun portfolio-wide updates to share with you. So the big one is our team is growing. So we have hired 38 new team members year to date. That is 19 folks in operations, 3 folks in leasing, and 16 in construction and maintenance.
Crazy.
Yeah, here's a whole roster of our team members by role. Many of these are extensions, right? Like more maintenance technicians as the portfolio grows, more leasing agents as the portfolio grows. Many of them are new to the company overall. We've been so excited that our scale has now allowed us to bring in skilled tradespeople. So we now have a licensed HVAC technician on staff. We made an offer to a master electrician just a few days ago. These are huge, right? We know how much benefit we've had as we've brought more and more things in-house, starting originally with maintenance and then cleaning and then lawn and snow. And now to have a portfolio that's the size that allows us to bring in those skilled tradespeople as well. It's so helpful because here's the constellation that happens when we bring these things in-house. Number one, we control the process a lot more. So instead of having to call vendors, right? Remember, these vendors are working for other property management companies, homeowners directly, and they're managing their book of business as best they can. So we call and say, hey, we have a air conditioner out or heater out or something, and we just kind of go into their queue. And at times we can say, hey, we really need you to kind of bump us to the top of the line or that sort of thing. But you can only ask for favors from your vendors for so often. So now we control that process because that person is directly on our payroll, working exclusively for the Black Swan portfolio. We control the quality. We don't have to have questions around what types of units do we want or what's our standard for how quickly we repair things. We control the cost because we're able to decide exactly what materials and parts we want. We have a much better control of the labor there. And so it's really just this like beautiful trifecta where the residents get more of what they want, which is faster service. Someone who understands our processes doesn't have to say things like, well, let me, call the maintenance supervisor and figure out, what needs to happen. They know exactly because they're inside of the company. The buildings get what they need, which is swift maintenance. And then the portfolio as a whole gets what it needs, which is controlling cost. And that's basically vertical integration in a nutshell, right? A lot of times people hear vertical integration, like, I'm not really sure what that means. It's bringing things in-house so that you can control quality, cost, and speed. And it's just been so amazing to bring more of these folks into the portfolio as the portfolio has grown.
We have a real-time win to make this like super concrete for everyone online. So we hired this in-house HVAC technician. One of our leadership team members just missed a leadership meeting because he was troubleshooting this HVAC issue with our new HVAC technician. We have this system at one of our buildings, and there's lots of costs associated with it. They went and the motion sensor for one of the thermostats was malfunctioning, and we learned that for the first time because we have the ability now to pull those codes and check voltages and trace wires and stuff. And so if we hired a vendor, it would cost thousands of dollars to dispatch, diagnose, and what they would do is they'd replace that motion sensor. And what we did was we said, well, we don't really need a motion sensor in this part of the building. It probably just creates confusion and the system cycles on and off. So we're just going to disable that motion sensor. They're like, wait a second. Where else don't we need a motion sensor? And there's countless motion sensors we could disable. And then we're like, I wonder how much we spend per year replacing these motion sensors that never even needed to exist. They never to be installed in the first place. We might, save the building $10,000 a year on a go-forward basis by proactively disabling those motion sensors. That only happens because we have an in-house HVAC tech, whereas if you hire the vendor, They want to bill as much as they can. So huge win with our in-house HVAC tech, like in real time. That just happened like
I heard Tyler on the phone in the hall as I was handing off the baby.
Yeah.
Here's some pictures of our amazing team. That was another question that came up in a webinar I did yesterday. Is kind of, how do you get all of it done? And some of it is just that we enjoy the growth and the chaos in our lives, and a lot of it is this really amazing team. Up here in the corner is many of our maintenance and facilities folks. Some of our leadership team here. Stephanie, our director of operations, who many of you know and love, she also had her baby this quarter. So that is just so exciting. She is on maternity leave. She's doing quite well. Just an amazing team. Our virtual team, who is supporting the company 24/7, 365, handling literally tens of thousands of phone calls and emails and utility bills and all of those things day in and day out. This is the team that drives it all. And we're just so grateful for all of these folks. That leads us to Best of the Best. So every year in Rochester is Best of the Best, and we have been fortunate to win Best of the Best several years in a row for Best Property Management Company. And we would just be so honored and so delighted if you took just 30 seconds here. There's a QR code. If you would scan that QR code and vote for us. We are nominated for several different categories this year. One is Best Apartment Community for residents at Discovery Square. So if you are an investor in either Fund 1 or Fund 2, you have an ownership stake in that apartment community, and it would be awesome if you voted that it's the best apartment community here in Rochester. Best Property Management Company for Black Swan Living. Best place to work, medium to large. We actually have a chance of winning this year because last year Mayo Clinic was also in that bucket. And they have, hundreds of times more employees than we do. So we really had no chance of winning last year, but we have a fighting chance this year for best place to work, medium to large employer, and then also best customer service. And here's why this matters. These are things that people look at. When someone is relocating to Rochester from whether it's across the state or across the country or even right here in town, they're looking for things like ratings and awards and reputation. When people are looking for a place to call home for their career, they're looking at these sorts of things.
AI scrapes these things.
Absolutely. Yeah, that's a really good point there, Nick. So this is super helpful for us when we are able to be nominated for these awards and when we're able to win these awards. It really does have a meaningful impact on the number of candidates that we have for leasing, the number of candidates we have for employment to run this big, amazing portfolio. So there's a QR code there for you. We'll put it in the replay email and in the brochure as well. You can vote every day through August 3rd. And truly, it means a lot. Like I can't overstate that. If you are an investor in anything in the portfolio, your vote matters because it helps us to attract the people that we need to lease our buildings to and to build this amazing team in Black Swan Living. So that's my dogged ask for you to vote for us for Best of the Best. It really does matter. We're so grateful to continue to be nominated each year. And we're going for, I believe, a 4-peat on Best Property Management Company. So that'd be pretty cool if we could get a 4-peat this year on Best Property Management Company. Let's do some fund specific updates here. So for Black Swan Real Estate Fund 1, that is a nice, steady, quiet fund in its maturity phase. So that owns Nicholas and Oliver, half of residents at Discovery Square, and then a portfolio of single-family homes. We've returned just a hair under 21% of the original capital to date, and that is processing 1% annualized distributions on a monthly basis. No big updates for Fund 1 this quarter. It's really just in kind of its steady, mature phase. All of the operational things that you hear about in terms of marketing, leasing, pushing up rental rate, pushing down vacancy, managing maintenance expenses. This building, Nicholas, has a very complicated HVAC system. It's kind of like the best of the best for multifamily buildings, but it's really, really complicated. And so we have to have a lot of vendors working on this building. And so Nicholas is really going to benefit from us having that.
That's where we saved the $3,000 today.
Oh, I knew exactly what you were talking about as you told the story. So that is a huge update that Nicholas will really benefit from, that HVAC technician that we now have in-house on the team. Extensive details for both Fund 1 and Fund 2 were provided in the Q1 2026 updates. You can see both that live recording and then also the PDF brochure at blackswanteam.com/updates. We spent probably half of that quarterly update talking about Fund 1 and Fund 2. So if you haven't yet caught that, I definitely recommend taking a listen to that. For Fund 2, that is also nicely in its maturity phase. We are still holding back a little bit of capital for acquiring 2 final units at Riverview Apartments. You may remember that was a condominiumized building where it was all individual owners. We bought the majority of the units from one single owner that had collected those over the years and then acquired the other units. There's two owners of those units that are still in that building that would like to own those units for a long time. And, we're not going to do anything high pressure to push them out, but we do need to reserve some capital so that when those folks are ready to sell their units, we can acquire those last two units and then own that entire building. So that's really the only thing that's just kind of that asterisk every quarter. And we don't know when that might be. It might be next quarter. It might be, 3 or 4 years from now. Whatever it makes sense for those folks to sell their units, we'll acquire those for the fund. But we do need to reserve a little capital for that when that comes along. And then we're also doing monthly distributions for Fund 2. And then we do have a pretty big update for Tanara Villa. That's the largest asset in Fund 2. That is in the Tacoma portion of the Black Swan portfolio. And for a long while, this was our largest asset in the entire portfolio. It was ousted by Villages at Essex Park, which was our $40 million acquisition in December of 25. But for a long time, Tanara was the largest asset in our portfolio. And, as you can imagine, gets a lot of our time and attention. And so we have some fun updates to share for Tanara. It is doing really well.
It is. So Tanara's been, we've been very transparent. Our longest and most challenging renovation project. There's a lot of permitting escalations where we went to do like washer dryer retrofits, and the city eventually required us to do asbestos remediation, which is questionable whether or not that was required. And just I think the municipality kind of trying to get permit revenue and different things as best they can. So this has been a long road to hoe, and it is there. We've completed about 100 heavy renovations and 30 light renovations, and have about 10 units that are remaining untouched. So historically, this asset ran about 20% vacant, very high vacancy, because we were in different stages of renovation on so many units. And these are the most in-depth renovations we've ever performed in the history of the company. There was just so much opportunity here, so much upside potential. We achieved stable occupancy, which in our mind is 95%. Most people would say 90%, but we're at 95% as of July 15th. I think July 14th or 13th or something like that. We got our move in that got us up above 95%. Yeah.
He's saying it like he's calm, like that was like a big celebration.
It's
that was a big
something
deal.
that we discussed on a weekly basis.
Yes,
What is the occupancy at Tanara?
Yes.
And it was always really challenging because we were, taking units down for renovations and kind of encouraging tenants to vacate so we'd be able to renovate those units. Two different levels of rent control have come into play since we purchased this asset, both at the municipal level and at the state level. Extraordinarily challenging kind of operating environment for a project like this, where at different times it was, we'd go to attorneys and judges and they would literally not be able to tell us what the law was or what, we were allowed to do or not allowed to do. And all those things became extraordinary operational headwinds, and that's all finally resolved. This asset is now in the final state we want it to be in. We're just unbelievably relieved, excited, jubilant to see this thing stabilize at 95% occupancy. And now the fun part, we're going to have tons of loss to lease makeup. Like rents will grow because we had discounted rents and incentives and stuff because we were turning over units so aggressively in a very kind of challenged operating environment. And there's just so much potential in this asset, so much financial potential now that we've realized the physical potential of this asset. This is just this is an incredible win for at one point we sent members of our team from Rochester to literally just go be in the office at Tanara
to live there,
to live there, to lease units. Just like there's so much riding on this. This is so important. If we somehow didn't have someone in the office on a Sunday and lost a lease, like that's a big deal. So a tremendous amount of enterprise-wide focus on this particular asset, and it has been just a huge success to see this thing get across the finish line.
And it looks so gorgeous. There's some pictures there. This was it's not our largest turnaround project to date. Meadow Park has now taken Tanara is losing all of its awards kind of as the portfolio matures. But at the time, this was our largest renovation to date. And you can just see it has turned out so beautifully. One of the questions that came in is let me scroll up a little bit. The occupancy rate for Fund 2. And so our team member, Laura, answered that. We're at about 94% occupancy. And then it's also important to note that in the summer is actually when occupancy dips. It seems a little counterintuitive, but that's when people are moving in and out. So you get kind of that like point in time. And then occupancy is generally the highest in like September, October, November, December. And so occupancy is really strong across the entire portfolio. And then the operating expense ratio. When we get to our AI slides, we're going to share how we have AI updating these things for us on a daily basis for every single asset in the portfolio. So stay tuned for that. It's a really neat dashboard that we've created.
Yeah, I could look at my notes and probably find an expense ratio or something pretty quickly for one property. It would take some time to aggregate it. That's a very good question. Thank you.
So Black Swan Real Estate Fund 3, both Fund 3 and Fund 4 are doing 7% annualized distributions, and they have finished all of their acquisitions. They are very stable. Really no major updates for Fund 3 or Fund 4. They're both doing, quite well because they're relatively new funds. Fund 3 is from 2023 and Fund 4 is from late 2024. We've got long time horizons on the loans in those funds, all fixed rate debt. As you hear us say over and over and over again, such a huge value of ours in our portfolio to have good, stable fixed rate debt. And we've acquired everything in those two funds. We finished construction on Stonehaven Apartments. We've talked about that many times over the last several quarterly reports. There's a picture of it right there. That one's owned in Fund 4, and then lots and lots of runway on our debt for Fund 3 and Fund 4. So really the story of Fund 3 and Fund 4 is just really disciplined operations, maintaining occupancy, pushing our rents as high as possible, and maintaining expenses so that in the years to come, as we are approaching those cash out refi windows, we've got really solid financials to share with lenders. Could potentially try for cash out refis sooner rather than later. But as Nick mentioned, it's a really tough decision to make if you're say doubling your interest rate, is that worth it?
Yep.
But just always watching, what we can control in the portfolio with operations, and then keeping abreast of the lending market and interest rates and everything that's happening macroeconomically to see when the best timing is to harvest equity from those portfolios.
So Stonehaven Apartments, that's pictured there right now. I just happened to run the numbers here on that one a couple weeks ago, and it's entirely likely we could get a full cash out refi on that asset today, even though we just built it last year. It's just done really well. However, the in-place debt's good, and the debt we could get today is significantly worse than the debt that we could get last year. And so as we see those rates creep up on, like the 5-year treasury chart that I showed you, it's like kind of a wince. Like we've got good debt on our properties, but man, I wish we could go do a cash out refi, and it sure seems foolish to do a refi if it gives us a worse loan to put a new loan in place. And we're in that same boat on countless assets in the portfolio right now. If treasury rates do take a dive, which at some point they absolutely could, or it's at some point I think it's somewhat inevitable because the current situation is simply not sustainable for the U.S. economy. We're going to be in a really favorable spot for refinancing a lot of assets.
Let's talk about the Secure Freedom Fund. As we mentioned, we're so excited that we're opening that to the waitlist on August 7th at 1 p.m. Central. As Nick mentioned, and maybe many of you experienced, the last time we opened, we just did about a $2 million raise, and it literally filled in 90 seconds. This will be a $10 million raise. So if I had to guess, and this is just a guess, I never quite know how these things might shake out. I anticipate that we might fill within a day or a couple of days. So if you know for certain that you want to make a move in the Secure Freedom Fund, I would mark your calendar as close to as 1 p.m. Central on August 7th as possible. And then it will be open to the public if we don't fill from our waitlist with a live webinar on August 14th at noon Central. You can see the slide deck, the PPM, the operating agreement. Everything is right there at securefreedomfund.com. If you'd like to add your name to the waitlist, that's where you would do so, securefreedomfund.com. And we put all of that out there so that you can take a look at everything, talk to whoever is important to you, CPAs, attorneys, spouses, whoever helps you with financial decisions, so that if you do choose to invest, you're ready to make that move when we open, because it tends to move pretty quickly. But we want it to not be a high-pressure decision for you beforehand, so that's why we put everything out there. Secure Freedom Fund has certainly been the story of the quarter. Lots of acquisitions that we've closed on. We'll share those. And then we are under contract on 5 assets. We have one that we're working on new construction, and that's what is allowing us to welcome new investors into the Secure Freedom Fund.
A couple of bullet points here on why Secure Freedom Fund is what we call anti-fragile. So Nassim Nicholas Taleb, created Black Swan Theory, one of the namesakes of our company, and he has another great concept called anti-fragility, where you're not just resistant to change, but you become stronger as a result of it. And we focus really hard on the things that we can control and the things we can't control. The Serenity Prayer, as Elaine mentioned earlier. So we don't know what future interest rates look like, and we don't know how much an apartment building is going to be worth in 3 to 5 years. It's a time of more uncertainty in our industry than any time since probably the 70s, than since probably half century ago. So how we can go boldly buy so many apartment buildings in this environment? We know that if we get long-term fixed rate debt and we can hit that 10% cash on cash rate of return on fixed rate debt on that acquisition, when that debt renews 5, 7 years, whatever it might be, some of these assets have 30-year plus debt on them. is very likely when that debt renews, we're still going to be able to deliver that 10% cash on cash rate of return. Maybe there's no big bang cash out refi, like, is the business model for the legacy funds. Maybe we can merely just kind of sustain that cash flow, but we know we can keep producing that cash flow. And we have no pressure to sell the property, so we can keep delivering that 10% rate of return. So what we're doing is we're basically just writing lots of offers on properties. We're going to write 4 offers this next week on properties that are probably 20-30% below asking, which sounds a little crazy, but like that's just kind of where the spread is in the marketplace. And a lot of those offers don't work out. We present those offers with a lot of respect. Hey, we hope you find this offer valuable. A lot of times those offers don't go anywhere, but a lot of times they do. They've gone our way 10 times here in the last quarter. So it gives us extraordinary clarity. Like, we don't need to try to predict IRR or exit cap rate or what's going to happen on a discounted cash flow analysis basis. Like, can we get to a 10% cash on cash rate of return in the immediate future without having to renovate a ton of units or wait for some sort of market condition to turn around, like just with the rents that we can achieve today and maybe some simple things like installing internet or upgrading toilets? Are we at a 10% cash on cash rate of return? And if the answer is no, well, then the price isn't right, the deal doesn't work. And if the answer is yes, then we can do the deal.
The way we do underwriting is just so fundamentally different than the market. We're actually putting together a class on August 12th where we will do a live class with some live demos on how we do underwriting and how we think about underwriting. Like, for example, we don't really care at all about cap rate, which may sound crazy, right? Because a lot of people think of that as like the number one number in, the number one metric to follow in our industry. And we find it to be pretty useless, quite honestly. So join us for that class. You'll get all the emails to join us live. The benefit of joining live, of course, is being able to do Q&A, and then we'll get the replay out as well. But I'm excited about that class. That's one that people have asked for a while, and we're excited to put that together. So that is happening on August 12th.
Yep.
Oh, can I talk about Villages at Essex
Please.
Park? Yeah, I love this one. Villages at Essex Park, we acquired this on December 30th of 2025. You may remember we pulled out all the stops to close in the 2025 tax year so that we could pass out bonus and accelerated depreciation to our investors for this asset. This is one of those assets that has very long debt on it. So we did a HUD loan assumption with a 37-year term. It's at about 2.4%. So we know we have a tremendous amount of certainty for the next several decades on the debt on this wonderful asset. We really focused on the reason we have not opened the Secure Freedom Fund for much of 2026 is we knew when we were closing this asset at the end of 2025 that we wanted to give ourselves a long period of focus in Q1 and maybe even into Q2 2026 to focus on stabilizing this asset. It's 288 units, $40 million purchase price. So it's the largest asset in our portfolio, and pleasantly surprised that it's stabilizing far faster than we expected. And that's then what has allowed us to turn our attention to new acquisitions over the last 60 to 90 days. We replaced over 20 roofs in the last quarter.
20 roofs. That's not 20 toilets or 20
roofs. 20 roofs.
Yeah.
Yeah. As many of you know, the soccer fields in Rochester are right next to Villages at Essex Park. And it was soccer season. 2 of our kids play competitive soccer. And so Nick and I would be there in our lawn chairs at 6:30 at night watching our kids with either their practice or their games and watching our roofers putting the roofs on. Or, okay, look, like that, that roof, they're 30% more of it is done than was done yesterday. That was kind of a fun process. I wish we had like a time lapse video of that. That was pretty fun to see. Bulk internet is something that we do in the portfolio as much as we possibly can, and we've rolled that out to this entire community. We're working on installing electricity in the garages so that we can install garage door openers. We've turned 50 units. We have 12 pending move-ins, so lots of churn here during busy leasing season. And we're just so grateful to our team and really to the site staff that this was just a beast of an acquisition to bring into the portfolio. On December 30th, right? Like, Nick and I were so overjoyed to land that closing in the 2025 tax year because we know how much that means to our investors. But to our site staff, they're like, you're doing what? On what day? Like, how are we going to collect rent on January 1st? And we're like, we'll figure it out. We'll work with people. We'll make it happen. But we've got to land this for the 2025 tax year. And that our site staff, we're just so grateful for them and just rolling with the punches and just all full court press at Villages at Essex Park. And luckily, some of that full court press is starting to chill out now as we've owned this asset for half a year and it's really starting to stabilize. The bottom line at Villages at Essex Park looks really, really favorable. So the seller T12 NOI, that's net operating income at time of closing, was $2.38 million. And what we projected in our underwriting for net operating income at closing was $2.56 million. So that's just looking at like, hey, what moves can we make like pretty quickly after closing to fill some vacancies, push rent, bring down some expenses, looking at what the seller was doing historically, and then our point in time, what we think we can do at closing. We projected $2.56 million.
Which is kind of bold to just think you can add $200,000
Yeah.
to net operating income day one without, you're not doing like exhaustive renovations. You're just controlling expenses, reducing costs, maybe pushing rents slightly. It was a bold, day one, we're going to add hundreds of thousands of dollars
And
NOI.
half of the units at Villages at Essex Park are income restricted units, which means we have certain guidelines for rental increases, and then half are market rate. We've owned this asset about 6 months now. So our T6, so that means trailing 6. So that's from today, looking backwards 6 months for the 6 months that we owned it. Our T6 NOI today annualized, so it's just multiplying that by 2 to project that out for a full year, is $2.76 million. So about $400,000 more NOI on an annualized basis compared to the seller, and about $200,000 more than even we had projected, which is just, we don't always get this outcome. I want to make sure I'm clear that we don't always get this outcome. But I will say, in general, the way Nick and I think as owners is we really like to sleep well at night. Guys, we have 6 kids that keep us up. The last thing we need is stress also keeping us up. So we're super conservative in our underwriting, and we really think about like, hey, if we get like a couple base hits, right? We're not underwriting to grand slams. We're underwriting to base hits, things that we know we've done at other assets successfully, things that we know are working in the portfolio, rents that our leasing team are confident of achieving, those sorts of things. And so for us to blow past our projected NOI, like that's what we want to see. That's what allows us to sleep well at night. That's what makes it fun for us. And then our projected NOI, when we look at the next 12 months, specifically with the in-place rent roll, right? Because as you place new leases, then you benefit from that higher revenue over the duration of that lease, is $2.9 million. So just
Crazy climb.
Super excited
And
about.
that's not projecting some future growth. That's literally just looking at the leases that we have in place today. We've had just phenomenal financial outcomes with this large asset. And shout out to Crystal and Alina, our site staff there. They're absolutely killing it. Every day there's like 20 to 50 guys there swinging hammers, doing roofs, doing toilets.
Here's pictures of our roof.
Yeah. And they are managing a lot.
Yeah, that was a big project to re-roof.
Jay, who managed the roofing project on our team.
Yeah. So that is Villages at Essex Park. It'll start to get a little less attention in our quarterly updates as things start to stabilize. And, kind of the feeling Nick and I have is like, we made it. We did it. Like the biggest acquisition, had a lot of focus on this in the last couple quarters, and now it's moving into its stability and maturation phase. And we're just excited to see where that continues to go over the coming months and years.
Another shout out that while we got some photos on here, so you can see they have some GAF Timberline HD2 shingles. That's a 50-year shingle. That's like the best shingle money can buy. And you can see that crew. These are all local Rochester residents, people that live and work in Rochester that are W-2 employees of the roofer that we hired. It's a local roofing company that has been in business here in Rochester for decades, does phenomenal work, offers a lifetime warranty, which is pretty unheard of in the roofing industry. I could spend a long time talking about it, but just this is so different from how 99% of apartment owners replace a roof. They get the cheapest contractor from out of state with the cheapest shingle, there's a subcontractor of a subcontractor of a subcontractor who's the guys on the roof swinging the hammer. And these are people that we run into in the grocery store. And that means a great deal to us. And ultimately, we're able to get it done for a very reasonable price with a quality of outcome. Like when we still own this property 50 years from now, it's still going to be these shingles on it.
37 years from now when we still have that HUD loan.
That's right. Could not be more proud of that.
Awesome. So happy of Villages at Essex Park. Let's talk about our first closing. So this quarter, we closed on an asset here in Rochester called The Quarters. This is owned in the Secure Freedom Fund, 63 units, which sounds small, but the way this asset is structured is it's actually 4-bedroom units, and it historically has been operated as student housing. So it was a rent by the room. So it's 63 times 4 in terms of the number of separate leases on that. So a lot of transition work, getting all of those folks onboarded. And then we closed, and then the school year ended, and a lot of those folks moved on as because it's been run as student housing. We did a loan assumption at 4.25% from a regional bank that we've worked with quite a bit. So super excited about that. That's a question that comes up quite a bit. Is, people are like, well, how are you acquiring in the Secure Freedom Fund when interest rates are so high? And you're hearing some patterns here. We're looking for loan assumptions. We're working with banks that we've worked with before. We're using Fannie or Freddie debt, HUD debt. And so that loan assumption process is what we did here. We paid $8.45 million for this acquisition. one of the things that we really think about is price per unit. That has always been kind of the most important metric in our mind. And then particularly right now, while there's what is called price discovery in the market, which means values are soft and people aren't quite sure of it. And various sellers have different levels of distress that they're under in terms of the speed with which they need to sell. There aren't as many buyers in the market. So being able to just compare apples to apples, like how much are you paying for that unit? And to get a $134,000 per unit is a really favorable price. The loan that we assumed was a $6 million balance, and then we brought the rest with the capital from Secure Freedom Fund. And we also were able to work with the bank for $350,000 in construction financing so that we can do our renovation project at the Quarters. Brian is a member of our team who's been leading all of the work at Quarters. It hasn't quite been as hectic as Villages at Essex Park, but it's definitely like the little sibling to Villages at Essex Park in terms of just all hands on deck. Nick was there the first several weeks after acquisition. We've replaced carpet in all of the common areas, installed security cameras throughout the whole campus, refreshed the basketball court, the volleyball court, entry doors and locks, sheetrock repair, air handlers, you name it. We've done a lot of brush cleanup, and we'll share that here in the next couple of slides and how that's leading to the ability for us to build an entire new apartment community on the land that we acquired as a part of Quarters. Installed Niagara Stealth toilets, which are water-saving toilets. That's a big initiative we've had across the portfolio as much as possible. One running toilet that oftentimes the tenant can't even hear it. Or if they hear it, they don't really know what a big deal it is. They think like, oh, that's just a small trickle. That can easily end up being thousands of dollars in additional utility costs. And there's a huge lag there, right? Because you don't get the bill for 30 days after that running toilet starts. And so we've really pushed conservation efforts across the whole portfolio. And part of that is the toilet program that we have. And then light renovations, signing 26 leases just in the time that we've owned it. So you can see here, like when we acquire an asset, it is truly a full court press. We want to harvest our own, psychological joy of getting our team excited about that. You never get that like starting pistol ever again, right? You get one time for each asset to have that opening day right after acquisition and just pouring as many resources in as possible. And then we want our residents to see that we really care, right? It sends a really powerful message to residents who maybe haven't felt so cared for or are wondering kind of what's going to happen. Maybe they're fearful about new ownership. And when they start to see, oh, the carpets are being replaced and the lighting is nice and the doors lock now and they're replacing the air handler. So when you walk in, it doesn't have a funky smell to it. All of these things, they feel really excited about the transition. And then for, that small minority of residents that aren't great residents, that are maybe the troublemakers, that sort of thing, like there's a small portion everywhere you go that really sends that vibe of like, hey, we're here, we care, we are very involved, we are very engaged. If that's not exciting to you, maybe this isn't the place for you to live anymore. And that's not just true for Quarters, that's true for all acquisitions. But you can see that we work with speed in those first couple of weeks. Let's say we replaced carpets in all of the common areas, but it took 6 months to do it. Well, someone might not even notice, right? If it's just like this small little incremental change, a hallway here, a hallway there. But when that all happens in just a couple of weeks, it sends a signal to our team about the level of quality that we expect. And then it sends a really exciting signal to the residents who are living there that someone is there and cares and is excited to invest in that community.
Couple of fun photos for you here. So we took down all the signage. There was tons of kind of dilapidated signage. So you can see there's the sign that greeted you when you first pulled into the community, and it's cracked and there's mold or mildew on it. And then I laughed out loud. We took the sign down, and behind the sign was the dilapidated sign from the previous owner. And they just put up a new sign over the old sign. We had to take that whole assembly down. We don't have any signage there. Next, we've got some shots of the brush cleanup we did. So like it's difficult to explain just how beautiful this site is, but there was tons of growth, a decade or two of just growth. There's buckthorn and noxious weeds and stuff everywhere. And so I was out there on a tractor with a chainsaw with a whole gang of roughnecks that are excited to go out and chop down trees and clear brush. And when we got done, you could actually see the gorgeous wilderness. It's a waterfront property, and you could not see the water from anywhere in the property because the overgrowth was just so dense and gross. And there's litter and trash and stuff everywhere. There's a couple swans. There's always a pair of swans in every body of water in Minnesota. So it's just an iconic thing. They're kind of facing each other as they often do, make a little heart shape. There's a
sweet.
big bonfire that I was running for days at a time. And you might wonder, why is it worth my time to do this? Well, first of all, I love being in touch tangibly with the work that we do. When we've got
That's this picture of the tractor here. That's Nick
let's
sitting in the tractor
let's
seat.
click on that.
Does it
So
do
you
something?
can, yep. So pull it over here.
What do we have here? This is a surprise to me too, guys. What do we have?
And then that way, I got to revive it, and I spent 12 hours with the back on rise and sunset, greenhouse door. It looks absolutely beautiful. When we bought it, it seemed impossible that you could actually infill a new building onto the site. But then once we cleared out all this brush, it's like there is acres of waterfront property that we got here for free with this, this apartment building. Just hasn't seen a lot of love in a long time.
So let's talk about what we're going to do with all that beautiful land. One of the questions that came in from Jenny is Quarters still student housing? Yes. So Quarters is located next to the Rochester Community and Technical College, RCTC. And the way it was run previously is just kind of students and then also members of the general community were just kind of all mixed together across the buildings. And we are making it so that some of the buildings are student housing and then other buildings are just available for all comers, right? If someone wants a 4-bedroom apartment, they can either rent that with some friends or a family, just, regular market rate housing. So we're still working with RCTC, very excited about those partnerships. They have a lot of their student athletes that live at Quarters because they need to be really close to the campus. And then we'll also have members of the community there. So very excited about what we're doing with leasing for Quarters. And then this is pretty exciting. So all that tractor work, all that land, here we go. We are building a new apartment building. It is time. It is definitely time for it. Nick and I love to build. We love the creative process. We love all acquisitions. We love all change and growth and all of those things. But there is something unique about seeing something that is just dirt and then you build something on it. And then you just look at it and you're like, that is going to provide housing for humanity long after all of us listening to this webinar are gone from this earth. It is just such a special process to go through. So we are naming this building Eden Apartments. It will be owned by Secure Freedom Fund, 94 units, and we will be building it right on the additional land that we acquired with Quarters, working with the existing clubhouse, the existing fitness center, the volleyball and the basketball courts that are there, the soccer field, all of the things like lawn care and snow removal will all just synergize together on that campus. And then Nick has worked really hard with our architect, the city, our builder to drive efficiency and cost savings in this project. As you can imagine, it's difficult to build right now, so you really need to be focused on cost. And proud to say that we will now be one of the lowest per unit construction costs in Rochester in a decade. And that's just through a lot of creativity, a lot of what exact, HVAC unit are we going to use? And what is the exact sink that we're going to put in? And really trying to make the best decisions in terms of the longevity of the building, but then also having a financially viable project right now. So very excited about that. When do you think we might break ground?
If you come to Real Estate Real Life, there could be a groundbreaking at Real Estate Real Life. I don't know. We'll see. There might be a surprise. There may not be. There's a lot of stars that need to align, but that's the timeline that we're kind of shooting for there. Here's a little aerial so you can see the existing buildings. Then you can see there's this Walmart-sized parking lot, and then on the other side of that Walmart-sized parking lot is this beautiful waterfront. It's literally a wilderness preserve. It's just gorgeous, and it's just not set up very well at all. So we're putting a brand new building in for one of those parking islands. We'll still have more than enough parking. And these are brand new renders, hot off the press. I put these in like a couple hours before our webinar here. Beautiful building, simple building, no new amenity spaces we need to build. There's so many costs you save with infill projects, but it's still hardy siding, balconies and patios, and just beautiful new units. Could not be more excited. You get a glimpse of that waterfront in that lower right render. You can see the waterfront in the background there. And then in the upper left is the side facing the complex there. So it's just an incredibly exciting project. This is what society needs. It needs affordable housing that's clean, safe, new housing. And then we're pairing up our unit types. So like we're going to do lots of studio units, 1-beds, and some 2-bed, 2-baths to match up with the 4-bed, 2-baths that are nearly all the units in the existing building. So super excited about Eden Apartments.
The next big decision is the two pictures here. If you're watching the screen, One is with black decks and one is with white decks. Take a
Mhm.
look at those and pop it in
Vote
the
in
chat.
chat. Yeah.
Vote for us. We are back and forth. Do we want to go like the eyeliner black or the more bright and airy white? Let
You
us
read
know.
my mind. I did that on purpose.
No, I know you. I know. There's no reading your mind. I have a
I
very
never
deep,
told Elaine I was doing that.
I know you. Oh, we've got 2 votes for black and 1 vote for white. I love it.
We'll decide on this webinar if it's black or white.
There we go. Rachel, tally up the votes and we will declare a winner here. What is the build cost per unit?
Great question. So there's lots of ways to think about that. It's likely that our hard cost, that's the sticks and bricks and everything that goes into it, and the cost that you pay to your developer, that sort of thing is going to be somewhere in the ballpark of $130,000 per unit. $130,000 per unit. To put this in context, there's a brand new affordable housing community coming into Rochester right now, and their cost per unit is about $400,000 per unit for an affordable community. It's very difficult to do anything these days for less than 300,000 units. So for us to squeeze our hard costs down to 130,000 units is pretty unheard of. And there's just a million. I could spend a whole webinar talking about how we pulled off that miracle. There's a lot of clever things you can do when you get the land for free. There's a lot of clever things you can do with infill, like the city will waive parkland fees, platting fees, infrastructure connection fees, because it costs the city nothing. It's just intensifying an existing parcel, and then the city will collect millions of dollars of tax from us developing this parcel. So the city is highly incentivized to make it easy for us to develop this property. We're not asking for any subsidies from the local city, state government. We're not asking for any subsidies from RCTC, which is also somewhat unheard of in the current environment. Even like Stonehaven Townhomes, Stonehaven Apartments were only financially feasible because of the subsidies we got from the municipal government there. So it's really incredible. And our goal is to be an example of what's possible. We want people to, there's a whole group of operators visiting us from all over the country here in November. And I want them to come visit this job site. I mean, people hear 130 a unit, hard costs. Now, soft costs, there are still, some other costs there, but they hear that and they just there's no way that's possible. I want them to come see it. And I want them to be able to reproduce this product in their geography. And I want there to be more affordable housing in the United States that's not, subsidized, income restricted, just clean, safe, market rate housing for people to live in and call home.
A great question came in. What percentage of the portfolio for the Secure Freedom Fund is marked for ground up construction? And will that put a strain on the monthly distribution for the 10%? So in the grand scheme of the fund, very small amount. The fund right now has about 40 million in capital. After our raise, it'll have about 50 million of capital. And at any given time, for Eden specifically, it might be around 2 million of capital that will go into Eden for the construction loan there. And it is something that we have to think about. Interestingly, turning a community around takes a lot of time as well, right? And especially over the last several years where we've been much more sensitive to allowing leases to finish out, renewing leases, not pushing renovation projects as fast as possible, as hard as possible. So a turnaround project takes quite a bit of time too. And it's absolutely true that a construction project, you're just pouring money into that loan and you don't have anyone living there yet. But in many ways, we find construction to be easier because you just start with a blank slate. I remember when Nick and I first started doing multifamily housing, we had come from the world of single family, right? When you buy a single family home, it's typically vacant. So you just go in, you do all your renovations, you place that first renter in that home. And we're like, multifamily housing, they're occupied. I wish we could buy these things vacant. It would be so amazing. Of course, no one would lend against them if the vacancy was super high. But we love new construction for that way because you get that fresh slate. You can have a leasing season. And we did that with Stonehaven Apartments where we timed the construction so that we're pre-leasing units right into the busy leasing season and getting it filled as quickly as possible. That's a great question there.
Jenny asked, how big are the units? So the units, so you think about units in terms of width when you're a developer. The average one bed, for example, is 23 feet wide typically. If you go look at your typical apartment building, ours are 21 feet wide. And then your typical apartment unit is about 35 feet deep. So you can think that our typical unit's about 100 square foot smaller than you might ordinarily see. And our two bed is maybe 200 square feet smaller than a typical two bed. So we're talking, 650 square feet for a one bed, about 550 square feet for our alcove units that are pretty, they're pretty close to a one bed, but still, smaller than a one bed. Both those have a package terminal, heat and air conditioning units like you might see in a hotel hospitality setting. They're premium units, but significantly cheaper than a central heat and air unit. And then those two bed, two bath units are about 850 square feet. They're corner units, so they're really efficient because you've got two walls of windows to work with there. So these are smaller square footages than you might typically see, but still plenty of room with some pretty clever, we have like a walk-in master closet on those one beds that has the washer dryer inside the master closet. So you get a side-by-side, full-side washer dryer, and you get a walk-in closet, and we get to delete an entire closet from the property. There's no smart closet, there's no coat closet, there's no pantry closet, but we have accommodations for all those things. There's just a lot of things that we very cleverly omitted, deleted, that I think no one is really truly going to notice, and that's allowed us to really aggressively ratchet down our costs. So excellent question. Man, I really want to talk about it, but we should probably keep going.
Yes, we are at 1 p.m. Central. We closed on Oak Hills Manor. This is also owned in the Secure Freedom Fund. 48 units in Circle Pines, Minnesota. Very close to an acquisition also owned in the Secure Freedom Fund, Rainbow Plaza, that we closed on over a year ago. And so our site management staff from Rainbow Plaza will also take care of Oak Hills Manor. Built in 1995, 5.2 million purchase price, so $108,000 per unit. It was formerly a LIHTC, a low-income housing tax credit income restricted property. And the way those work is they last for 30 years and then they phase off into market rate. And this one is now a market rate community. And so there's massive upside that comes from that transition out of the LIHTC property. It's a 3-story property, elevator served, has this amazing atrium. It's just really, really, really well cared for. This was the property tours that Elizabeth attended when she was about 3 weeks old. And we were just so impressed with how clean everything is, very little in terms of deferred maintenance, really wonderful tenants living at this property, beautiful landscaping. It's just a great time. It's such a good, base hit. It's the kind of asset you buy and you're like, yep, this one isn't as much of a massive turnaround project as, say, Villages at Essex Park or Quarters or Meadow Park. We completed 2 inherited renovations within just 1 week of closing, got all of our residents onboarded within just a couple of weeks, brought on some site staff. So that really helps with that knowledge of the community through that transition, and then signed our first lease within 2 weeks of closing. So just a nice, simple base hit, helps to balance out some of the more challenging assets in the portfolio.
And those photos, by the way, you can just see like a before and after light fixture. So on the bottom right is a gold light fixture from our 90s construction asset, glorious gold and green carpet, just like my grandma's house. And on the top right is one of the new light fixtures. That's our standard light fixture. They're less than $10 when we order them in bulk. We can install them, like rewire an entire building in a single day. And just think about the splash the impact that has for existing and new tenants when you walk in. The top light fixture uses 90% less electricity than the one on the bottom right, than the old light fixture, and is probably triple the brightness. Those are the types of things where we just try to do those big splash improvements as quickly as we can.
We closed on Northern Valley. That's a small one, just 16 units, very close to Northern Hills. Simple community, an immaculate B-class asset, $2 million purchase price, $127,000 per unit. Easy peasy on that one. Tiny little asset to bring into the portfolio. And then we also closed on West Willow. If I stand on my tippy toes and kind of look, I can almost see it out the window here. Yeah. That's 28 units, less than a mile from our headquarters where we're standing right now. $3.35 million purchase price, $120,000 per unit. $2.5 million in debt on this one. All 2-bed, 1-bath units. Those rent really nicely. Again, just another safe, solid base hit. So really just trying to acquire whatever we can where the numbers work, but then also thinking about slotting in some easier assets into the portfolio around the assets that are taking up more time and attention. And then let's talk about all the growth that we've started in this quarter by getting some things under contract. And then this is really the story of the rest of 2026 in the Black Swan portfolio, is getting these assets closed over the next 60 to 90 days. First up, we have Cascade Apartments. Nick and I have had our eyes on this one for really 4 years, I would say.
Offered on it many times.
Yeah, 44 units, built in 2016. We were able to get this one under contract at $7.2 million, $164,000 per unit. This is a Class A property, large units. You can see a picture of just the gorgeous kitchens there with the central island, stainless steel appliances, really nice cabinetry. Underground parking, which, as you can imagine, is really valuable here in Minnesota where it's cold and very snowy. Oversized balconies, really beautiful grounds. It's in a nice, quiet part of Rochester, and we are projecting our closing on this one before October 1st. That's our daughter's birthday. So maybe we'll close on her birthday. Really excited about this asset. We've had our eyes on this one for several years.
Through our window as well. I just realized that.
If we had binoculars.
Yeah.
We are under contract on Cedar Glen. So the next several slides is a portfolio of properties that we're under contract on kind of all together, although they are separate communities. First up is Cedar Glen. This is 64 units, $6.45 million purchase price, $101,000 per unit, built in 1967. So really incredible per unit purchase price, right? To be right there at $100,000 per unit. We're targeting October for the closing of this portfolio. Huge green space. You can see the beautiful pictures there. And it goes along with Cedar Gate Apartments, 48 units. So individually, they're not all that exciting, but combined, we're getting hundreds of units all together. $5.25 million purchase price for this one. That comes in at $109,000 per unit. And the special thing about this one is that it is across the street from Mall of America in Bloomington, Minnesota. That is like the place to be. Really, really nice area, and excited to have just such a solid B-class asset in such a prime location in Bloomington. And then it's also right next door to single family homes. So that's really important when you think about like zoning and planning and the resident experience. Maybe if that prospective resident is touring several different communities of where to live. An apartment community that's situated inside of a single family home neighborhood tends to have much more of a residential feel. Nicholas and Oliver, for example, in Fund 1 is situated inside of a single family home neighborhood, and people comment on it. It feels different. It sounds different. And so this one's kind of the best of all worlds, where it has this huge park, a gorgeous courtyard across the street from this really amazing source of commerce and shopping and employment, but then also situated in a nice, quiet neighborhood. And then the third one of this little trifecta that we're under contract, this is all with the same seller, is Metropolitan Towers. That's 112 units. So combined in that little mini portfolio is about 200 units. So very excited about that. $12.9 million for the purchase price, $115,000 per unit. And this one is immediately adjacent to the Mall of America. If you just kind of look out across the parking lot, you can see it there in the picture. Right here, you can kind of see my mouse moving, that colorful thing right there. That's called the Crayola experience. So for those of you who maybe have never been to Mall of America, there's tons of shopping, all of that, but there's the Crayola experience. There's a whole roller coaster park inside, an aquarium, restaurants of all type. Like it's almost like a small Disneyland. We take our kids there quite a bit and just have like a full day of entertainment. So Crayola experience is one of the kind of central outdoor areas where you can enter the Mall of America, and you can see this asset is just literally like almost in the parking lot. It's pretty neat to have a piece of real estate that's next to such another valuable piece of real estate. Huge units here. So these are one bed, one bath units at 1,100 square feet. So, Nick was sharing with Eden, our one bed units might be around 650 square feet. So just kind of put that into perspective, like almost double the size, based on when it was built. That's what was fashionable to build in the 60s. And we're excited about that. I'm sure you want to talk about Cedar Glen, and Metropolitan Towers. I know you're super excited about it. Anything you would add?
Man, lots of things I could talk about. Scott Brennan asked, any concern about expenses that are deferred, maintenance, that sort of thing? In general, they're actually in pretty good shape. The boilers are all new. Roofs are new and in pretty good shape. The grounds are in good condition. Like Metropolitan Towers has real cedar siding that's all in excellent condition. We walk these properties very aggressively. We score all the units on a scale of 1 to 10. Anything below a 7 is going to be a point of concern. And we only had a handful of units that are below a 7. And then South Point, the one that's pulled up here, one owner for 40 years, kind of unheard of on a 1962 vintage asset. This is actually the best condition building of this vintage I have ever seen. Just a gorgeous pool campus. The exteriors are in good shape. All the roofs were done in 2018. Most of the roofs have been done in the last 10 years. I think maybe all of the roofs have been redone in the last 10 years on every single property. So in a lot of ways, these are not like, I don't know, modern Class A buildings. These are C-class buildings, but they're nice buildings, and they're in a phenomenal location. Just one of the best locations in the state of Minnesota. If you ask anybody, where would you want to be, they would say South Metro, and like this is just the beating heart of that area. And South Point here, another 142 units, $15.4 million purchase price, for $108,000 per unit, with just a gorgeous campus. And then this one actually has surplus land, just like Quarters does. So if Eden,
imagine what we might do with this.
indeed works out, we would infill here. We have
Very exciting.
multiple infill opportunities if we can make that work. So altogether, we're acquiring 450 units in Bloomington all at once. And that's a very deliberate thing because we really want to get these economies of scale. These are about 10 minutes. Some are 6 or 8 minutes from Apple Valley, from Boulder Ridge Townhomes in Apple Valley. So we're going to have 600 units or something like that in that one area that they can share a plow truck and a lawn tractor. So we went and we bought some different assets in some different locations, kind of spreading our wings, and we've had success with them and learned a lot. And we're going to go all in, and we've put together multiple properties from multiple brokers and multiple deals and got them all to line up. It reminds me a lot of 2021 when we got
Feels so
a
similar.
huge block of properties under contract in Rochester and had, I think, like 7 deals in flight or something. It was crazy. It was during the pandemic and no one was buying. And right now, no one is buying C class. Like no one is buying, like just there's so few buyers. So the per unit purchase price we're paying on these is it's pretty staggering. Like we're assuming loans on 3 of these properties at over an 80% LTV. They originally originated at a 60% LTV, like in 2017. So just doing that math, like we're buying them for, essentially a lower basis than the seller had them at, 10 years ago. So just incredible purchase price on all these assets. And we're putting together a campus that's going to support the economies of scale that we really enjoy in Rochester and be kind of our launching point. Like for example, there's 1,000 units for sale in the Apple Valley right now. That's too much for us to probably take on at once right now. But if we get this 500 unit beachhead, then we could maybe pursue a large acquisition like that in the future. So we're unbelievably excited. This is a big play. This is a big opportunity. Just the numbers work extraordinarily well. Huge opportunity to serve. This is our bread and butter product. A lot of time and calculation and effort has gone into it. And it's so exciting to be able to announce this to everybody.
Yep, absolutely. So that's what has kept us busy over the last quarter, in addition to having a newborn, is getting all of these things under contract, all of the trips to Bloomington, building our team there. We had a big meeting just a couple of days ago about the next generation of team that we need to bring in Bloomington to steward this portfolio. And then we'll be closing on these through the fall and then stabilizing these through the rest of the year. And that's what is allowing us to open the Secure Freedom Fund for existing investors to increase your investment if you'd like to, and then for new investors to come in. And this is the first time that we've had a big enough raise to be able to open to new investors at all in 2026. The last time we were open to new investors was in late 2025 when we were closing on Villages at Essex Park. So we hope you're as excited about this portfolio as we are, and you can see more about it at securefreedomfund.com in terms of the documentation, and join on the waitlist if you'd like to. And go ahead.
Yeah, there's a question there from attendee. What funds are set aside for unanticipated expenses and repairs that are common on these C-class properties? You are 100% correct.
That's what Nick and I were talking about during our pleasant drive to pick up our children from school yesterday.
That is exactly right. So the joke is, these older vintage properties, these C-class properties, they have non-recurring expenses that recur all the time. You have collapse.
Nick's doing air quotes if you're listening in podcast mode.
Maybe scare quotes in this case. And you have to prepare for them. So we have a budget, a pretty meticulous budget that we put together where we score every single unit and its unit condition and likelihood of that unit to be turned over in a certain time frame. We look at every single boiler, every single roof. We're going to spend about $100,000 on roof repairs, for example, at Metropolitan Towers immediately after closing. That's something that we got the seller to reimburse us for. We have a really clear idea of what those expenses typically look like, and we operate quite a bit of C-class housing. We don't touch buildings that have chiller systems. We scope the pipes. There's a lot of calculation that goes into this. There's lots of properties we look at. We're just like, we really can't touch this. Just the CapEx is going to eat us alive. So we really look at the quality of the product, its level of maintenance, how much it needs immediately, how much it's going to need down the road. And then in hard numbers, we're going to be able to close on that entire portfolio of units that you saw for probably about $8 million, and then about $1.5 million is what we have set aside for upgrading toilets. Actually, toilets are already upgraded on many of these. So those are a line item that we have. But to give you a sense of proportion, first of all, that it's not a very big down payment because we're getting the bank is eager to give us like a max LTV loan because the numbers just work so well at the purchase price we're paying, and then we've still set aside $1.5 million for not like programmatic unit renovations, just, okay, we're going to go spend $100,000 on this roof and we got to go replace all these screen doors that are torn. And, we have literally, we have a count of the number of screen doors that we need to repair. That's the level of meticulousness that we have in our unit walkthroughs. We'll have a team of about 15 people walking the property for days, just scoring and reporting and jotting down and taking photos of everything. Not to
We walk about 20,000 steps per day.
Yeah.
And Nick and I think that the only thing that's harder than doing due diligence on an apartment is going to Disney World.
Very similar activities.
In terms of just standing and walking and thinking all day. But that's such a beautiful segue right into what we're going to share here in terms of what we're doing with AI. This is clearly like the story of 2026, and is going to continue to be, not just for our company, but for all companies that are trying to stay forward focused over the next several years. So let's share some of these fun things that we're doing. So first of all, why are we trying so hard at AI? I think a lot of it just comes from the psychology of Nick and I. We love creativity. We love innovation. I had a career in medicine. Nick had a career in technology. And so we bring that culture and that, sense of looking to the future into asset management and property management, which tend to be industries that aren't as forward looking as, say, medicine or technology. So we bring that just a totally different spirit into these industries. Real estate is what is called a high asset, low obsolescence, a halo industry. So what does that mean? High asset means there's something of real tangible value: dirt, sticks, bricks, wiring, roofs. And then low obsolescence means it's unlikely to become outdated in the future. Even with AI, even with robots, even with massive changes in technology, some of which can be predicted and some of which can't yet be predicted, humans will still need somewhere to live. So real estate is a high asset, low obsolescence industry, a halo industry. And those types of industries will be the biggest winners with AI. I don't know why I'm talking about AI. I know you were like chomping at the bit to talk about this. Let me turn it over to you. I deprived you of the joy of sharing the portfolio that you got under contract. I won't deprive you of this joy. Have at it, my friend.
When you got 10 properties in flight, you gotta go fast.
Yep.
This is something it's difficult to overstate the impact of this. People think that, a lot of people say we're in an AI bubble or something like that. That's not true. That's not what we're seeing on the ground. That's why we're spending some time on this. This will be our final beat, by the way. So we love, like, very, very few people like leave our long run webinars. We hope that you find this valuable, and we hope that you see, like, why are we going out and buying half of suburban Minneapolis C-class? Because of this right here, because this is the long-term outlook. So yeah, these halo things, they're going to do extraordinarily well because AI is going to reduce the operating costs associated with those businesses, while simultaneously driving deflation in other areas, giving people more money to spend on those things. We think that multifamily housing will likely be one of the last things to get disrupted by AI, and will be one of the biggest beneficiaries. Let's just look at some numbers real quick to see what that looks like. So let's say that you're able to shave $100,000 of operating expense from an apartment building with AI, which is a very, like, downright easy thing to do with some of the technology that we have even today. Not even the technology tomorrow. We're going to give you some examples of that here in just a moment. So with most businesses, if you are able to shave $100K off your expenses and improve your profit, you might have, say, a 3x multiple. You increase the value of that business 3x. In multifamily, you increase the value of that business by 20x. It increases the value of that apartment building by 20x that $100,000 amount. So $2 million of new value that's created. That can be through countless factors, and we're going to dig into some examples that by the end of this, hopefully you see the thing that we see. And we do have a little disclaimer there, just that real estate values are determined by a number of factors, including many that are outside the control of Black Swan Real Estate. And this is an example to illustrate the concept that increased NOI generally leads to increased asset value, but does not guarantee or promise any specific future outcomes. So just a quick disclaimer. This is for reference purposes here. But this is something that we are seeing in real time on different properties that we own. So let's just look at a few examples of that.
So one of the questions that came in, maybe toward like 1/3 in the presentation, was about expense ratio. So if you're still listening, either still here live or catching us on the replay, This is something that we hand created this many years ago. We run most of our company inside of Google Sheets, and we had a whole army of people who would update all of the various sheets, whether it was on a daily basis or maybe it's utilities, it's on a monthly basis, and then use formulas and other things to aggregate that data up to be able to look at per community, right? Because that's what matters. And you also want to be able to look at things in terms of trends, right? Like you need to look at your utility trends across, say, the whole portfolio, but then you need to bring that utility number into the per asset. And so it was all sorts of work and just lots of cognitive load on our team to do all of this spreadsheet work. And as you can imagine, ripe for human error, right? If you put a plus sign instead of a minus sign, or you cut and paste a cell the wrong way. So lots and lots of effort have gone into these spreadsheets over the last many years. And now we're using AI to supplement our human workforce and to catch mistakes from our human workforce. And so we see this every single day that's updated by Claude. Why don't you tell us what you've created here?
Yeah, so this used to be manually updated once per month. You have to pull in data from our property management software, from QuickBooks, from mortgage statements for debt service, calculating construction costs for non-recurring expenses. Here's just one example. It's Georgetown. And so we can calculate in real time, updated every single day, what is our net operating income, our cash flow. So this speaks directly to the question about like expense ratios. And then one of the really cool things is we can even look into the future. We can look into the future. So people say AI is going to wipe out all the jobs. At no point in human history has any technology resulted in fewer people having jobs. Like there are more accountants who are employed today because of Excel, not fewer, because all of a sudden accountants had these superpowers and they could look into the future. They could do projections. So now you can see, as of today, we can say our rent roll for August and our rent roll for September is likely going to be these amounts with this vacancy, with this average rental rate. Now that's going to improve. Like historically, you can see we've got 2%, 3%, 4% vacancy. We're going to sign leases, but we can now compare property to property. Whoa, this property has a very high future projected vacancy. This is an extraordinarily rare thing for us to have, dozens of apartment buildings, $500 million in assets, and I can go to a sorted, analyzed list every single day, and AI says, "Hey, here are these 3 buildings. These are your hotspots today." That is an extraordinary, like it's omniscient. It's difficult to describe that level of superpower.
One of the things that we do is think about things that take the most amount of just human horsepower, right? Someone looking through line items, doing a lot of cognitive load. And one of those things is HUD reimbursement. So as we've grown the portfolio, we have more and more HUD loans. And the wonderful thing about HUD loans is they have very low interest rates, often with very long terms. So for example, at Villages at Essex Park, we have a 37-year term there. So it's worth it to jump through the hoops of the paperwork and everything for HUD reimbursement. But how do we minimize that burden on the team? And one of the things about a HUD loan is you have to submit reimbursement for things like the repairs that you do, the repairs and maintenance. And there's it feels like there's like a million different rules, and invoices have to be, this exact same certain way with this exact amount of information. It used to take a lot of time for a human to go through all of that data and look to see like, okay, well, this invoice won't work, but this one will. And this one, breaks out, say, flooring versus paint. So this one will work, all of those things. Well, you can tell Claude what all of the rules are and just direct it to HUD's rules directly. Say, go to this website and look at HUD's rules directly, and then look at all of these invoices over the last month, over the last quarter, and prepare for us our exact reimbursement docket that we need to submit into HUD. And it takes about 15 minutes. Now, it does take another layer of human interpretation, making sure that there's no errors, making sure that it makes sense. But you can imagine with anything in your own life, creating the thing is the hardest part. Analyzing and thinking about the thing is much easier, so that Claude can get this big bolus of work done, adjudicating invoices versus HUD's, prescribed rules and the if-then statements and all of those things. And then one of our senior accountants can then take that and look at it and then submit that into HUD. It takes it down from 2 full person days, probably 15 minutes for Claude to put it together, maybe another, say, hour or 2 for a senior accountant to review it before it's submitted into HUD. And it makes it so that the humans are able to do much more interesting, valuable work, right? A human doesn't really need to look at every single invoice and scan it to see, has flooring been separated from paint, been separated from plumbing. That's not the highest and best use of a human being's time, right? The highest and best use of a human being's time is the analysis, the thinking, the creativity that goes into it. And so AI can do all of that work to deliver the report to the human to then get that ready for HUD. And then here's something cool. This is brand new, hot off the presses. This was Dick's idea for our unit walkthroughs. We've done a ton of unit walkthroughs in the last quarter, getting all of those assets under contract and all of the due diligence period. And what we historically do is we have a Google Sheet that everyone in the team has right on their phone. And so in Google Sheets, if you're not familiar with it, if you're holding your phone and I'm holding my phone and I put something in to cell B2, you can immediately see it. So there was this like really swift communication between team members. We'd have big teams there and say, these 3 people are going to look at this floor of units and these 3 people are going to go look at this floor of units. And we could all see each other updating in the Google Sheet, like all in real time. So already much more technologically advanced than say like a paper and a clipboard, which was, might be what's common in this industry. And Nick had the idea for people to use Plod. That's just a small, not Claude, Plod, just a small like wearable device. It's about the size of a credit card that records audio. Just kind of wearing that. And so that as the team is talking and saying like, oh, this unit looks like maybe it needs I'm looking like up at the corners because that's what you do. I have like a muscle memory about myself. You go in the unit, you look at all the corners. This unit needs a new repaint, or this unit has a great kitchen, isn't going to need, new cabinets or new countertop. And that's just automatically caught in the transcription. And then hours and hours and hours, probably hundreds of hours, right?
Yeah.
You figure we had 15 or 20 team members per asset for several days. And just dumping those transcripts into Claude and then asking it to create a report. And you can see here exactly what it created. So if you're listening in podcast mode, this is a great time to take a look at the screen. You can see my pointer here, like it's, what is the unit? We're talking about the common areas on the 3rd floor hallway. There's ceiling water damage near 301C, and the category is a water leak and the priority is medium. Like think about capturing all of that data. And then no one has to go recapture it in the future, right? Because there might be 90 or 120 days between due diligence and closing. And we don't want to lose that data and have to send another team back out to say, okay, now that we've closed, go look at everything again. There is some of that because you want to catch anything new that's either been improved or new problems that have come up. But to be able to, right after closing, send a human in and say, go to the ceiling near 301C and check to see if that water damage has been renovated. And if not, put in a ticket so that it can be handled. Boom. Unit 108, the bathroom, the left faucet is heavily leaking. Inspect ASAP. So that's something we can compile right in and communicate to the broker and say, hey, we're not asking for, any, financial concessions or anything for this set of maintenance tickets. But if we owned this asset, we would want to know right away, here are the things that we found that, just pass this information on to the seller. And we think they probably would want to know that these things need to be fixed, sooner rather than later. We talked earlier about how, a running faucet, a running toilet can easily cost thousands of dollars over a month-long period. Unit 201 in the bedroom, there's a hole in the door. So that's low priority, but it does need to be fixed so that unit looks nice and that standard that we have in our buildings. This used to take weeks.
Yeah.
Like if the HUD reimbursement was days, this was weeks.
Yep.
And a lot of human cognition and a lot of human feelings, right? And after you've seen, a couple dozen units across a day, you're like, you sort of have a feeling of like, well, things are good or things are bad, or like, oh, I don't know, this one's really rough. But then to be able to have this level of data and then to be able to then build the onboarding plan, and no human had to sit and look at transcripts and look at checklists and those sorts of things. So that was a really interesting, it was your idea that you came up with this, and we were able to test it many times in just this past quarter. And this is certainly a part of our due diligence process, going forward now. Very, very interesting.
We talked about how you get a level of omniscience with having a dozen different recorders, transcripts that it can stitch together thousands of pages of transcript, and you get a level of consciousness, of awareness that far exceeds what a human would be capable of, because it can synthesize such a larger data set. At this time, a human can have deeper thought, but a human cannot aggregate the same level of data that Claude can. And so think about the amount of data that we have access to in different slices of our company. Here's an example of that on the utility side. So we just had Claude go analyze all of our utility analytics on every building all time. And
we have years of this data that a human has been updating for probably 5 or 7 years now.
Yeah. Huge data collection. So, hey, look at this building, Oliver. The water sewer bill has gone from $9 a month to $23 a month, and Hamilton has had a 39% year-over-year increase in electricity. We did actually find a space heater that some well-meaning person had turned on in the elevator room when it was really cold outside, and that space heater had been just quietly running, and had been running in the summer here. So Claude saw that because there's like base load charges and usage charges and stuff. So Claude can actually look at the bill and see how many kilowatts are used, interpreting individual line items from every single PDF bill, and so the actual utilization at this property has increased in this pattern. It happened at this time, and it's still happening today. You need to go fix this. No human can figure this out. No, and there's no way it'd ever be cost effective to pay a human to do it. Think about the impact this has on your net operating income portfolio wide, and doing this for construction, lawn, snow, maintenance, elevator, alarm, monitoring your payroll, making sure that payroll makes sense. And we're diving in headfirst. We have multiple full-time employees where all they do is they are pushing the frontier on these types of activities.
One of the ways that we've been able to rule out AI into our company is with the use of something called Whisper AI. So if you haven't yet checked out Whisper, highly recommend it.
Get it.
We have no financial incentive or anything like that. We are just a customer of theirs. But what you do is you just hold down two buttons on your keyboard and you just speak. So you can just speak as though you were speaking to another human. I always like to think about, if I had the world's best X in front of me, right? If I'm working on, say, apartment underwriting, if I had the world's best apartment owner, what would I ask of that person? And you just hold the two buttons and you speak to it, and then it types out everything, and then you can move so much faster than having to type things out. You can just be more fluid in your consciousness and as you're thinking through things. So you can see here, I'm number 5 on the leaderboard. I have some space to go. Nick is number 1. He's done 17,000 words saved. And it's just something we're trying to push everyone
in 1 week
in our company.
Yeah.
If instead of typing, is there something you can do with voice to text, and not just in responding to emails and text messages and those sorts of things, but in the communication with Claude, right? Being able to give Claude all of the information that you want to get out of your head, because what you put into AI is what you get back. So instead of typing like, please analyze this spreadsheet for me, no, talk to it. Pull up Whisperflow and say, you are an experienced real estate operator. You have had decades of experience in owning and operating apartment buildings. You are very cost conscious and you are an excellent accountant. I want you to analyze this spreadsheet and look for trends and do a SWOT analysis. I want you to know the strengths, weaks, opportunities, and threats, and tell me all of the things that I should know so that we can open a conversation about how I can improve the financials of this apartment building. I'd like for you to give me some suggestions of things I can do in the next day, the next week, the next month, and the next year. It takes a lot of time for a human to type that out, right? So you may just want to say, give me the analysis, but if you can just hold the two buttons down on Whisperflow and just sort of like, oh, and if you could like add this in, like that'd be really cool too. And are there any numbers that are confusing to you? Any questions that you have for me before you do the analysis? You can get a lot better output from Claude if you give better input into it. And so that's what we're teaching everyone across the enterprise as much as possible.
And like I love that our 2 leaders there are Wyatt and Jordan next to me on Whisperflow, mostly on their mobile. So they just talk to their phone, and then we have a Claude skill set up, and the Claude skill can connect to our keypad code sheet and pull down the keypad code sheet for that building, for that unit they're going to tour, pull down the contact info from the CRM for the tenant, set up an appointment, email and text the tenant on a routine cadence, reminding them, and all that's just done from Whisperflow. They can just talk to Claude and say, hey, I'm talking to this person, or Claude can even listen to the conversation with the prospect and extract the key pieces of data from that. The amount of time saved is beyond staggering, and the number of additional lead conversions. So here's one of those inception moments where, of course, Claude helps create this slide deck. So that slide on Fed rate and 5-year Treasury, those were slides generated by Claude, and we literally just have Claude go look at Elaine and I's email from the last quarter and have it think deeply about it, and just tell us, what do you think are the 20 bullet points we should have in this slide deck or whatever, and then we take that narrative and those source pieces, and then we kind of fashion them. But if we wanted to, Claude could frankly write the entire slide deck. It could not do this last December. It could kind of do it in like February or March, and was kind of clumsy at it. Now with Fable 5, Claude can almost do a better job of it out of the gate than Elaine and I. It's still off, in many places, but the amount of gain in such a short period of time is quite staggering. So just for funsies, we said, hey, let's have Claude make the deck, and
We were stunned.
it was stunning. Yeah.
Yeah, let's give Claude another 6 months, and I think
Yeah.
the decks will be much better. So this is how we use Claude. This is the Black Swan team over the last 90 days. About 50% of the work is done in chat. About 44% of the work is done in co-work, and then about 5%, the people who are leading the charge, leading the organization, are using Claude Code. That's about 5%. And we're producing things like Word documents, Excel spreadsheets, daily leasing follow-up. You can imagine that that's a huge piece of work in a portfolio of 2,500 units, PDFs, documents, and reports. It's just interesting to see how things are changing over time. When AI first came around, it was ChatGPT, and it was a substitute for Google, and now it is an entirely different being inside of the business. And just really excited to see as we push more into like that Claude co-work and Claude Code frontier, what more and more we can bring into the portfolio. Maybe we'll do a whole class on that sometime, but just
Absolutely.
I'm sure we'll be doing AI updates for the next many quarters because it is just the changes are just unprecedented. A little bit about rent growth here. We include this in every single presentation. Probably the best way to interpret this data is when we publish the PDF. Sit down and just take a minute or two and look at these slides. Laura spends a lot of time. Laura's the one holding our baby right now, so thank you, Laura. She spends a lot of time putting these slides together each quarter, looking at leases, prior leases, how things were when we acquired whatever that particular asset is, and tracking our rent growth. You will hear Nick and I say over and over and over again, the lifeblood of an organization is revenue, right? So if you're a lemonade stand, you need to sell lemonade. If you are an asset manager, you need to lease your units because that's how you get revenue. So it's something we focus on quite a bit. We've had this slide in the presentation for a couple of quarters now because it helps you to understand our market here in Minnesota. So this is the 2026 rent growth forecast for major markets. And you can see, there are a lot of headwinds in the industry, right? More than half of this list from Houston downward is negative rent growth. Well, it's hard to run a business when the thing that you sell, you can charge less for it this year than you could last year, right? Phoenix is at negative 6% rent growth. And Minneapolis, St. Paul is leading the charge with 4.7% projected rent growth over 2026. You can see now why we're so excited about Minnesota. We have been excited about Minnesota for years. We've built our portfolio here. We think of Minnesota as a blue ocean market, right? It's not, what you've seen over the last many years in terms of the Carolinas and Florida and Phoenix and Austin and these like huge hyper growth markets that are now contracting, right? They're kind of boom bust cycles. Nick and I came of age in Oklahoma City, which is a boom bust cycle around oil and gas. And when you've kind of lived through that and you have that in your bones, you just like sense it everywhere you go. And Minnesota's kind of the opposite. It's just this like quiet state in the upper Midwest, pretty reasonable regulation, pretty reasonable politically. And there's not a lot of like big players here. And so we've kind of staked our claim on Minnesota, first in Rochester and now in greater Minnesota. And the data shows that is likely a very smart move with 4.7% projected rent growth. And that's baseline. We're hoping that we can push that even more with the acquisitions that we have, with the management improvements that we have. And we'll show you here what our actual rent growth has been over the last quarter.
Yeah, we had our best renewals month ever with April, and maybe you've heard us say that before. Well, we did even better in April.
Whole renewals team now.
Yes.
So what used to be handled by just one person, we now have a whole team and scripting and a process that starts 6 months out from when that person's lease is projected to end, because that is how important renewals are in any business. It doesn't matter what you're selling. Retaining an existing customer is the most profitable thing that a business can do. And so building that machine to be constantly, pushing improvement in this area of the business.
Yeah. So a 72.3% renewal rate, that compares to an industry average of usually about 54 to 55% right now. And you could drive a truck through that margin. It's unbelievably profitable to have your existing customers stay in place and have to go out and get new customers. But the most incredible thing is that we're achieving over a 6% average renewal escalation. Rents go up by over 6%, along with that 72% renewal rate. And that compares to national average is maybe about 1% right now. You can see on that chart that our renewal rate has dipped down as we get into the summer months when we tend to have more of our seasonal turnover. So we expect that. but we've built out a whole team. AI's had a huge impact on this. This is something that I personally focus on. It's such a critical part of our business. We've got a bunch of charts here that show rent growth for Fund 1, Fund 2. We feel like this is like the clearest signal, the clearest data point for someone to understand. If you invested in a real estate syndication or private equity fund in Austin, Texas a few years ago, it's very likely that rental rate that they're facing like negative 30% rent growth, and it is very difficult to keep your head above water when you've had such significant contraction in your revenue. But we've had very, very, very strong rent growth. So Fund 1, Nicholas and Oliver, in place rental rate when we bought it, $1,381 a month. Today it's $1,830. Pretty incredible climb. Fund 2, you look at assets like Colby, started at $721 a month. It's at nearly $1,100 a month. Or RDS, we've only had that a short period of time. We went from $1,400 a month to $1,700 a month. City Hall, one of the most dramatic climbs there, from $1,200 a month to $1,800 a month in just a few short years. So unbelievably proud of the team. Everything that goes into this, like price is your clearest signal. If your customer is willing to pay, that means they're probably getting value from it. Fund 3, Georgetown, we've had that since August 2024. We've gone from $1,300 a month to $1,600 a month. And then we haven't even rolled out internet. That's getting rolled out right now. That's going to add another $65 per unit per month to the entire rent roll. So that'll go to $1,650 or something like that. So just absolutely incredible rent growth across the board. Boulder Ridge, $1,571 to $1,869 since March 2025. Y'all, that was a year ago. Mm-hmm. We've gone from $1,571 to $1,869. Absolutely meteoric rise in rent there. We have spent like $1.3 million on improvements to Boulder Ridge. It's needed a lot of improvements, but it's stabilizing, and we've got the rent growth to show it. Just absolutely incredible outcomes there.
And we publish all of these in the brochure format that we put on the website, blackswanteam.com/updates, because there's a lot of data for you to see here. So there's a lot to consume. If you're listening in podcast mode, you're not able to see these, and even if you are, there's a lot to see just on one slide, but all of this comes out in the PDF as well.
Yeah, and then the rent climb into Tacoma is even more dramatic than it is in Minnesota. That's just the nature of that market. Tanara, that we kind of celebrated completing our renovations there. In-place rental rate on average when we purchased it was $938. Today it is $1,700. It's nearly doubled. And as I said, there's still a huge amount of loss to lease. We're signing leases at all in close to $2,000 per month today. That's just it's unheard of for you to more than double rent.
We need to do a real estate real life in Tacoma one of these days.
It's
show off these gems.
It's absolutely incredible. Garfield from $725 to $1,200, and we didn't have to spend a lot of money on renovations. That was mostly just cleaning up the neighborhood, frankly. So unbelievably proud of this rent growth. Here's what it looks like on a line chart. So like Boulder Ridge had that crazy climb in such a short period of time. So you see it's just kind of a steady upward trajectory as we sign new leases and renew old leases. And Colby, similar kind of thing. It's not like we just kicked everybody out and jacked up rents. We try to do incremental rent increases. So even if we're leasing at rental rates that are 30% over in-place rent, we'll still offer someone maybe a 10% rent escalation or whatever, and just be transparent about that and try really hard to just work with people and just meet them where they're at. So this is not there's not a like some sort of stair step hockey stick type thing, just a steady climb. And if we do that, we're going to be extraordinarily successful.
We would love to invite you to Real Estate Real Life 2026. We have a virtual option this year, and we spent a lot of time and effort really honing in our virtual option last year. So we would love to have you join us September 18th, 19th, and 20th. We try to give as much as we possibly can in these quarterly updates, but there's only so much you can fit into 90 minutes when you're talking about a $500 million portfolio. Real Estate Real Life, we do much deeper dives. We talk to you about what your real estate goals are. We do some coaching, some visioning. We do property tours. And even when you join us virtually with the virtual ticket, we have these amazing camera systems and several different people that are right there following us along in the property tour. So it literally feels like you are right there with us touring the properties. Totally different experience than, looking at pictures on a slide deck. You can ask questions in real time. This is not just recordings that you get. You are right there in the live Zoom room. We can see you. We can see your chat. We can see Q&A. We have a concierge who runs those Zoom rooms as well. We've really tried to, take Nick's technology background and lots of experience from really creative members of our team to make this virtual experience that you are literally right there with us. And then you do get lifetime access to all of that if your schedule doesn't allow you to attend while we're having it live. But come as much as you can live so that you get that feeling and you're able to chat and ask questions, and we can unmute you and the whole room can hear you and you can hear the whole room. We've really tried to make it as though you're just right there. You can learn all about Real Estate Real Life at RERL2026.com. If your schedule allows and you'd still be able to join us in person here in Rochester, all the better. We love Real Estate Real Life. This is our 5th year. And I would say people kind of uniformly describe it of like, I didn't quite know what I was getting into. It's a little bit different than like a traditional conference, but man, I understand real estate investing better than I ever have before. I understand the Black Swan portfolio. I have some ideas to apply to other investments, whether that's other passive investments you have or your own active portfolio that you run. And then we do a lot really focusing on what it is that you want out of your life. We do some visioning, some guided meditations. We do a breathwork experience so that you leave that weekend not just improved as a real estate investor, but the point of real estate investing is to live a big, amazing life and thinking about what is that life that you want to create and what are the next moves you need to take. Would absolutely love for you to join us virtually. If you like these quarterly updates, Real Estate Real Life is just this all weekend, nonstop, even better. And you get access to the recordings to follow along if you need to step out during the live time. Truly so excited about it. This is our 5th year, and Real Estate Real Life in many ways is, I don't know, it's almost like another child of ours, right? Of, we just kind of pulled this thing out of thin air in 2021, and it has gotten so much better every single year. Last year was our first year with the virtual experience, and this year we're just doubling down on making it an even better experience, and would absolutely love to have you there. That is a wrap, my friends, on our Q3 2026 update. As you can see, so much going on over here with stabilizing our existing portfolio, focusing on operations, growing Black Swan Living, 38 team members year to date, and more to come. Lots of new acquisitions, some new construction, and then a whole portfolio under contract that we'll be closing on in the next months. That allows us to open the Secure Freedom Fund. So August 7th at 1 p.m. Central for our waitlist. Secure Freedom Fund.
Save the date.
Save the date. It's gonna move fast. So go to securefreedomfund.com, take a look at the documents there, have an opportunity to think it through with anyone important in your life. If you have any questions, you can reach out to Nick, myself, Rachel. We want to make sure all of your questions are answered before we open so that when we do open, you are ready to go. I expect it will move quickly. And that is a wrap.
That is a wrap. Lots of cover. This has been a very busy quarter.
It's been fun.
A wrap. Yeah.
It's been fun. Thank you so much for joining us, whether you joined us live or caught the replay. It is always a pleasure to serve you. It truly does mean so much to Nick and I. I was not kidding when I think the question came in of, what about expenses in the new acquisitions? Like, this is what Nick and I do in our daily professional life. It's what we talk about when we're at home after we put the kids to bed. Like, we just love creating. We love ideating. We love innovating. And we know that is because you guys have chosen to invest in Black Swan, and that is what has allowed us to have the growth that we've had in the past and the growth that's coming up in the future. And we just take it so seriously to be able to steward your capital and to grow together and just do amazing things in the community and put whatever little dent we can on the housing crisis in America. And we're in this together, and we appreciate you all so much. Thank you for being here as part of our update. August 12th for our multifamily underwriting class. You'll get emails, reminders, all of those things. That's going to be a ton of fun where we kind of dive into the psychology of how we think about multifamily underwriting. Real Estate Real Life Virtual is in September. Truly, from the bottom of my heart, I want you there. I know you will benefit so much from it. I know you will love it because that's what I hear from our attendees every single year.
Life-changing.
Breathwork is life-changing, all of it. And then we'll set a date for our Q4 update, and we'll make sure that we share that out and that you're invited to that. And that's when we'll be celebrating all of these closings, and that's going to be so fun. We'll see what else we have under contract, right?
We'll see.
Who knows? Thank you, everyone. Have a great rest of your day.